As everyone is widely becoming aware, the world is undergoing a dramatic shift towards electrification and the advancement of AI. And North America is a critical region, just given the metals and minerals that we have. We have a very strong mineral endowment and high governance standards, and those are importantly very valued in this market by both investors and end users. Ultimately, if energy transition is going to happen, it's going to require significantly more mining, and it's going to need to be done in a responsible way. And North America is very well positioned to participate in that process. I think the demand for critical minerals across the region is going to continue to increase, just given the movement towards energy transition. It's a relatively new trend over the past few years that is likely to continue for the foreseeable future. We're seeing government involvement in the mining sector accelerate in terms of broad funding for mining projects, either directly through mining companies or through other government funding programs to help accelerate development of projects. The ultimate goal really is to assist with the onshoring of critical minerals that will help with the energy transition movement. It's important to remember that the mining sector is pretty small in the grand scheme of things, and there are very few capital providers like Appian that have the depth of technical expertise that we have, and we're generally viewed as a pretty logical partner to help advance the sector. Generally speaking, we look for projects where we can apply one of our competitive advantages. One of those is our technical expertise. We have professionals that have decades of experience across every mining discipline, and that allows us to evaluate projects in-house rather than having to rely on external consultants. In addition, we have creative financing solutions that we think differentiate us. We can be very flexible with our counterparties in terms of the terms and timing for getting transactions completed that align with their needs. We typically prefer not to look at projects that are too early stage. Our funds do have quite long lives, but ideally for us, we'd like to invest in projects that are somewhere along the development path, so something that has PEA as an example, or ideally even further along, where we can take the project through the development and into production, which is where we typically look to exit. In terms of commodities, our portfolio consists of a wide range of metals and minerals across the spectrum. We have our own internal commodity price outlook for various metals, and we like to invest in areas where we ourselves have done research and believe that there's a long-term structural demand growth that is supportive of investing. One of the core strengths of our team is our technical expertise. We have over 100 professionals globally at Appian, and almost half of them have some level of technical background, whether that's through education or having worked at a mining company at some point in their career. And what that allows us to do is to evaluate every aspect of a mining project in-house rather than having to rely on external consultants. Our team has evaluated over 4,500 projects across the globe, and so we typically already have at least some level of diligence that has been completed or a view on a project. Now, the mining industry changes pretty significantly, and so project scope may change, commodity prices may change, and we're always willing to relook at projects in that event. But generally speaking, we at least are able to evaluate things pretty quickly. And if we need to reevaluate our position, we can do that, but we can generally do it on a timeline that meets a lot of our counterparties' needs. In North America, we have a diversified portfolio of 7 equity, credit, and royalty investments across various commodities and various stages of development in the region. Our team focuses relentlessly on trying to manage those investments and try and provide the best outcome for our investors. Despite making several investments over the past year, we continue to have a significant amount of capital to deploy in the sector, and we look forward to hearing about any opportunities that may come our way. Appian regards environmental, social, and governance standards as absolutely crucial parts of our investment process, and we adhere to the highest international standards. That applies both to our portfolio of investments that we have in terms of just managing and advancing projects, as well as new opportunities that we review in our investment process. Every aspect of our investment process and portfolio management involves our dedicated ESG team, whose sole focus is to review opportunities and make sure that we're adhering to the highest standards. I think for us, we view the recent changes in critical minerals and investments in that sector as probably one of the most important themes that is likely to continue for the foreseeable future. The amount of government funding support for critical minerals that you're seeing, as well as just broad industry support through new companies that are able to raise capital, projects that are being advanced. If we're going to onshore ultimately critical minerals in North America, it's going to require significant capital, lots of government support, and it seems like that is more of a structural change than you would typically see in a normal commodity cycle.